Today is Thursday, February 2nd, 2017. Happy Groundhog Day. For those of us here in the States that use small underground rodents to predict the weather, it's a momentous day for us. 6 more weeks of winter. So congratulations if you enjoy the cold. You get 6 more weeks to enjoy said cold. Hey Francisco, good to see you. Good to see everyone here today. Welcome to our classroom. I am your somewhat chubby, losing weight, eating healthier every day, up here in the 3rd story of the house, trapped in the attic, far away from the noise and the kids' host. And we are broadcasting to you live here from East Bend, North Carolina, where, believe it or not, we have one stoplight in the whole town, and it's just started blinking. We have a whole traffic cycle now. It's big news here in the town. Everyone's real excited about it. A lot of scuttlebutt over that recent addition. There's city water coming from the city here, not too far down the road. They're digging in the trenches and putting in the water lines. Everyone in our neighborhood said, keep your city water, our well water is just fine. And we're excited to be here today. Jim, we're looking at a 90-day envelope for that at the earliest, and as soon as the information is available, it'll be out to you. As early as 2 months, possibly as late as 3, based on latest estimates from the programming staff here. Why are we here? What are we doing? Why are we here and what are we doing? We are here for one very simple reason, and the reason is this. Without a lot of showmanship, without any equity curves, without any pictures of my houses in West Palm Beach and the south of France and California, there are none of those things here today. We are here collectively as a group of both new and veteran traders using NinjaTrader indicators, using TradeStation indicators, MetaTrader indicators. We are here collectively as a group, a community, an open source learning community where we share everything we know on a mission. We are on a mission to take back the edges, the advantages that have been systematically denied to the retail trading community by the banks, the investment banks, the large economic forces that have for decades now, in our opinion, gone virtually unregulated and unchecked. So for 10 or more years, investment banks have invested heavily in the kinds of technology that you'll have an opportunity to own yourself here in a few hours or so. Technology that destabilizes the free market, the efficient market theories that should guide the way prices go up and down. What does that mean in English? It means that you have, as an intraday daily trader in futures or forex or equities or the Nadex binary options, the moment you wake up and decide that you're going to learn to trade, you are assuming a potential failure rate in the 90th percentile of failure. Let me put that in perspective for you. You have a very minuscule chance of being bitten by a shark. And so most people don't worry about walking into the water at a beach. You have a slightly elevated chance, more than being bitten by a shark, of being hit by lightning. And there are people that have been hit by lightning 6 or 7 times, Guinness World Record holders. But for the most part, we leave our houses every day, rain or shine, and we're not preoccupied with the thought of dying or being seriously injured by a lightning bolt. However, because of what the banks have done, because of the technology grab they've made, because of the data mining practices they've employed against you, you have a 9 out of 10 chance of failing. Ask the NinjaTrader brokerages, ask TradeStation brokerages, ask any one of the forex brokerages that are handling the orders today. Go to any of the other platforms and ask the brokers, what percentage of your clients are actually above water and making money? And the number over the last 10, 15, 20 years has never changed. 10%. Some would say 5%. And yet people are lining up in droves to trade away their life savings, to trade away their inheritance, to trade away their kids' college funds. 9 out of 10 people fail. You have a better chance of becoming a neurosurgeon. At least you'd know what to do, what steps to take. There's a fair process in place. So the banks have taken this edge away from us, and they've forced people to think that to be successful, you need to join multiple trading rooms over the course of your life. Most of our customers have been to 3 or 4 gurus by the time they find us. The banks want you to believe that you need to buy tens of thousands of dollars worth of indicator packages and training programs, and most of our customers have spent between $25,000 and $50,000 on what they would say in hindsight was regurgitated useless crap. Most of our customers have blown out 1 to 2 accounts, losing between $20,000 and $30,000 before the light bulb came on, and they realized that doing what everybody else was doing yielded the results everybody else was having. And so you reach a point where you become overstressed, very cynical, very jaded, and most importantly, very careful. You wake up to the reality of the markets, and that is simply this: the markets are rigged. They are not fair, and no one is coming to help you. Anyone who is successful as a trader generally keeps to themselves. They don't share what they're doing. They don't share what they're learning. They go off to some proverbial Himalayan mountaintop and make their fortune and keep their system secret and safe and tight because they don't want to spoil it. It took so hard to cultivate and get to that point. Why is it so hard? Why is it so hard? It's buying and selling. When something is worth more, the value should go up. When something is worth less, the value should go down. Okay? But we see week after week reports that indicate the market should go higher and they fall hundreds of points. We see news reports and economic reports released that indicate things are fantastic and the market falls. We see horrible news come out where people are standing on the edges of rooftops contemplating suicide, news that bad, and the market rockets up hundreds of points. And you say to yourself, wait a minute, it seems like every time I sit down to make a trade, the market goes in the opposite direction. And that, my friends, ladies and gentlemen, is where we start. We are on a mission into the trading community to expose the mechanisms the banks use to make sure you're always on the wrong side of the trade. You are ants to them. You are the grease that lubricates the wheels of liquidity in the markets. Your accounts, your funds make sure that everyone at Goldman gets a bonus at Christmas. Every Goldman Sachs employee buys their wife a new Lexus. Big SUV crossover in the driveway with a red bow comes from you. And that, my friends, comes from their unfair advantages. So today we're going to expose those unfair advantages. The less advantages they have over you, the more level the playing field becomes. And so if you fit in that envelope, if you fit in that profile of cynical, scarred, up to here with garbage indicators, up to here with the same old webinars, the same old promises. If you sit at my feet, young Jedi, I shall teach you everything I know. Taketh every entry that I taketh, and thou shalt prosper. If you've heard that song and dance, and you understand that it's code for you're probably going to fail, so we're going to take money from you on the way down. You figured all that out. Free trial means piece of crap. Money back guarantee means not worth toilet paper. Then today I hope that you learned something. Today I'm excited for you. And there's a small percentage of you here today that fit inside of that envelope. About 10% of people who see our software demonstrated get it. It's hard. It takes work. But today you're going to see undeniable evidence that it works. You're going to see evidence at the end of this webinar when you're finished here today where you will have to make a decision. Do I want to continue doing what doesn't work or what barely works? Or will I recognize the validity of the proof that I was shown? Today we're literally going to walk on water, figuratively, maybe not literally. I'm going to show you miraculous information. Someone who can predict the future. And you can. I'm not a necessary cog in this process. Someone who can take a tool and forecast what someone's going to do next. A day, 36 hours, 48 hours into the future. And that thing actually takes place. That's a pretty miraculous thing. And so today I want to examine this question of a leading indicator as opposed to a lagging indicator. What should happen on the other side of this chart? I want to talk about looking forward. Most of you have been trained by these numbskull snake oil salesmen to look backwards. You're looking at momentum indicators and volume indicators and order flow indicators, and you're constantly looking at what somebody just did a little while ago. And somewhere along the line, you believe that was effective. Today, we're going to go the other direction. We're going to go the direction the 5 or 10% of people I believe are successful. Those people, we're going to look the way they look. We're going to look to the right side of the screen, but we need to frame it in a statistically relevant envelope. Meaning, I just can't show you one signal and go, ta-da, give me your money. That's not how it works here. So we're part of a big experiment this afternoon. You all are. You all took part in the experiment, and we're all here together in an open source learning environment, meaning everything I know I share. And I'm teaching you what I know in the hopes that some of you who are much more intelligent than we are, much more talented in analysis and pattern recognition, you're going to take what we've done and run with it in ways that we can only imagine and speculate. Average week is broken up into 5 days, right? Monday, Tuesday, Wednesday, Thursday, Friday. And the days of the week are broken up into very specific marketing techniques for us. We do the same things every week. Jerry, if you can hold tight, we're going to get to that specifically. I want to lead into it so that people know what's going on, okay? We can jump right into the nitty-gritty, or we could sort of lead into it for people who've seen it maybe once or twice and aren't really sure what's going on. Fair enough? Okay. I promise I'll go over that and you'll understand what all those numbers and arrows mean. In fact, if you don't understand in the next 90 minutes what those arrows mean, I will have failed in a way that I've never failed before. So statistically, you're going to learn and know and be more confident when you see that signal. Every Tuesday, we send out a link to a web page. Well, I didn't get your link. Well, you're probably already a customer, and you don't get them if you're already a customer because you can generate the software. If you aren't a customer, you're getting a link to this page, and I'm going to go ahead and copy it and paste it into the GoToWebinar chat box. Now, for those of you watching on YouTube or a recording later, I'm going to go ahead and blow this up so you can in fact see what the link is and reference it in your studies of our company. So if I paste it and blow it up, I want you to see what it is. It's back-to-the-future-trading.com/flux-webinar-histogram-forecasts/. Okay? And we send that link out every Tuesday night. And that link has the projections for 10 markets for Wednesday and for Thursday. And those projections look like histograms. Okay? So if we come down here and we look, for example, at the E-mini S&P for today, there's a histogram chart. And we're going to go over what, in fact, that histogram means. But in reference to our statistical evidence, keep in mind that we've given you an output. We've given you an I dare you to follow and see what happens suggestion. This is the experiment that you're all a part of here today, because we're going to come back out of the markets on Thursday and ask the question, did it work or did it not work? Did it work or did it not work? So the important part in this era of the webinar, in this segment of our class, is to sort of collectively agree, what does it work or does it not work mean? What are the statistics associated with that? And so if I told you, hey, this worked 20% of the time, we would probably say, no good. If I said, hey, it worked 40% of the time, some of you might say, well, with some good risk reward, I might be able to make that work. But if we leave here today and we say collectively that it worked 60 to 70% of the time, and you're going to tell me what the results are, I'm not going to tell you. Okay? If that in fact is the case, then we'll have to collectively agree that it worked. Okay? So we need to define what does work mean, and then we need to review if what I sent you in the forecasts actually played out across Wednesday and Thursday. And if it did, then we'll have discovered an edge exclusive to the banks, because no one else is using this. You're probably here because this webinar sounded so weird to you, so different, so outside of the box that you had to come, if for nothing else, to mock and laugh at us. I guarantee you, though, by the end of the webinar, you won't be laughing. It might be nervous giggling in anticipation of your success moving forward, though. So let's talk a little bit about these patterns. Let's talk a little bit about how they're generated and what they mean when we get to them. Everything in life is a behavior pattern. You are extremely predictable as an individual. In fact, if we followed you around over the course of the week, I would virtually wager a guess, any amount of money, that after following you for a week or two, we could generally predict where you'll be at certain times of the day and what you'll be doing. You eat dinner at certain times, you watch movies on certain days, you go to the same restaurants, order the same food, take the same routes to work and back, visit certain people certain times of year. We are very predictable people. Other companies have keyed in on this. Facebook, for example, Google, knows more about you than anyone has ever known about you in history. You are a walking, predictable data set. How many of you believe that? How many of you are scared by that? How many of you have kind of opted out of all technology? I have friends, you would think they're running from the law. They live in places, they have no internet, they have very basic cell phones, they wear very large tinfoil hats. They don't want the government to know what they're doing. They don't want Amazon to know what they're buying. They certainly don't want Google to know what they're browsing. history is. How many of you know who Eric Snowden is? Quick show of hands by typing Y or N. How many of you know who Eric Snowden is? He was in the news not too long ago. Our last president did not pardon him and essentially told a lie about why he couldn't pardon him. He's a hot potato politically. Eric Snowden, for those of you who don't know, depending on who you talk to, is either a traitor or a whistleblower. And you'll actually see that denotation on the screen. People are very divided about who this man is and what he stands for. He worked for the National Security Agency as one of the higher level data analysts and computer science developers in that department. And what he discovered was that the federal government was collecting, forgive me, the federal government was collecting massive amounts of what is called metadata. That is, when a phone call was made, the phone number that was originating the call, how long the call was, and the number of the phone call answering the call. So the phone number transmitting, the phone number receiving, how long the call took place. And he said, you don't really know how valuable the data is. For example, they discovered using the same metadata that the government was collecting through something called data mining, that they could find out very important things about you. Number one, there was a 95% chance, I believe, I have to find the article, they could identify who the phone number was. Then they began to identify other things from the data. Things they could tell just from phone numbers, calling, and time of call. They started to identify people who were going to abortion clinics. They started to identify people who had deadly diseases that were calling very specific pharmacies. They were able to identify people's political affiliation. They were able to identify any one of a number of other very personal things just from the phone number called to. And so you had politicians on the Hill saying, well, there's absolutely nothing wrong with the program. All we're doing is collecting phone numbers, the time of the call, the length of the call, and the number they called to. Nothing to see here. But data mining discovered all of these things. And so the argument continues over where personal liberty stops and where national security starts. Well, why do I tell you all of that? I tell you all that because of this. There's a financial company out there. They used to go by the name of Palantir. They're now Metropolis. Go ahead and Google them after the video or after the class today. Palantir Finance does with financial data what the NSA was doing with your personal telephone data. They number crunch, and they crunch, and they crunch like a bowl of Rice Krispies until they find behavior patterns, and then they exploit those behavior patterns. Funny thing about Palantir Finance, it was funded by two sources of cash. Two people were very interested in making sure the technology got developed and then got into the right hands. And you can see on my screen who those two people were. Very unusual bedfellows, don't you think? On this side, the top 3 performing hedge funds in the world. We live in a society where over 50% of stock equity of the United States is controlled by 1%. Over half of the stock certificates held in America are controlled by 1% of the population. And so the top 3 performing hedge funds, according to Forbes, are heavily vested in this software. On the other side are good old buddies from the Central Intelligence Agency. Now, that seems like a fairly strange mix. It seems like oil and vinegar, but some of you are going, no, Michael, that seems actually like a natural fit. And so Palantir Finance, I wouldn't say single-handedly, but had a very strong impact on the financial world, because every time you buy and sell, you're making a phone call. Every time you place a market order or a limit order in the futures market, every time you buy and sell the euro dollar or the pound yen, every time you send out an order to purchase stocks or shares of Amazon or Tesla or any one of a number of top 500 stocks, Rite Aid, Citigroup, you're making a virtual phone call. And guess who's exploiting that data against you? It's these guys right here. Which way is the screen when you guys see me? Is that the screen if I point this way? These guys are exploiting it. Until 5 years ago, Randy, here's the thing. Randy said something very interesting, and I'd like to highlight what you said, because you don't realize something, Randy, or at least I don't know if you realize something. Randy just said this. He said, big orders matter. Little worms, no one cares. Randy, what happens if you have 5 million little worms all making the same bad trading decision? What happens if you get 10 million worms together with 1 or 2 contracts here or there? What if you're able to herd or change the psychology of an entire herd of retail traders through data mining? Did you know in this last election, Google was accused of influencing the political campaigns that were occurring? In fact, one technology website caught Google altering the search results for Hillary Rodham Clinton. And they compared the same results in the search engine from Google to the search engine results from Bing and from Yahoo and the other leading search engines. And they discovered when people were searching for Hillary Clinton crimes or Hillary Clinton indictment, Google would autofill the results with Hillary Clinton Indiana instead of Hillary Clinton indictment. And they were influencing hundreds of thousands and millions of people, pushing them away from what some would argue was the truth and pushing them towards something they wanted them to do. So I would argue big orders and little worms matter, because a large group of little worms is called a herd. And when you control the herd, you control the markets. So we're going to use data mining techniques against the banks. You have underneath your computers, I don't know if I can show you here where mine is, underneath my desk, there it is, it's upside down. I have a Pentium 4 i7 3.9 gigahertz overclocked 16 gigahertz of RAM 256 SSD trading computer. Big deal. When I went to college, I wrote my papers on a Commodore 64 with a fast load cartridge and a cassette tape recorder that became a 5 1/4 floppy disk that became a 3.5-inch floppy disk. Ladies and gentlemen, in the last 30 years, something magical has happened. You have access to technology that can do what the banks do. You have access sitting right now in front of you. The webinar you're watching through the computer you're watching has the ability to do the data mining that we're about to show you here today. Okay. So let me scroll down here a little bit and just ask you one last thing. Jim says, Michael, you were lucky I used a typewriter. Right? Your computer right now has more, right now, look at your laptop, look at your desktop. It has more processing power than the computer that took the men to the moon in all of the Apollo missions. If you took all of the computers from all of the Apollo missions and joined them all together, it would still be more powerful than anything NASA had back in the 60s and 70s. Our children are walking around with these devices, these cell phones that have more power than the Apollo mission computers. That makes you a very dangerous person. That makes you a threat. The banks don't want you to know you have access to that power. It's like big pharmaceutical companies don't want you to know, hey, if you have cancer, studies show vitamin C in very high doses starts to kill cancer cells. And so we're very suspicious of big entities influencing what we can do because they profit from our ignorance, right? This is why as a community we want to educate you. But I need you right here to stop and consider what your worldview is. If you believe the markets are fair, if you believe that everything I'm saying sounds nice, but it's probably not true, and the banks are nice people, and we're all determining the value of an iPhone together, then none of what I'm about to show you is going to help. You'll be trapped in that cycle. But if you'll give me just an ounce of cynicism, if you believe, like we believe, that the larger the institution, the more powerful the institution, the more likely they are to remove any edges little people can have, then we can have a really good conversation in the next half hour. Your assumptions control what you believe. And if you assume the markets are fair and they're not rigged, none of what I'm going to show you is going to matter to you. And that's fine. I'm glad you came. Come again. But if you believe the markets are rigged, if you believe that somebody's controlling the way things move behind the curtain, that has nothing to do with value and has everything to do with manipulation, choreographed moves, collusion between the big players, then this will make sense. And it'll be useful for you, and you'll be able to profit from that knowledge in a way intellectually that I believe will be very important to you in your analysis of the markets. So let's take a look. Let's get down to the nitty-gritty. What the heck have we got here? Does that sound good so far? Good, I hope so. What is a histogram? How do we, as small bugs and retail traders with very powerful computers, take back the edge the banks have stolen from us? How do we do that? Well, we do it through data mining. We're going to use the same tools against them that they use against us. And so a typical calendar of trading days, I'm going to break it up again into 5 days. 1, 2, 3, 4, 5. And we're going to break the calendar month up into weeks. And we're going to monitor when the banks make phone calls. We're going to record when they make those phone calls, most importantly. Let's go ahead and write that down. I think it'll help you with a visual word picture. We will study and record when banks call. That's going to be our Eric Snowden This software, this indicator package will be our whistleblower. We want someone more powerful than us, very specialized, to study when the banks trade and find the patterns that they don't want us to see. Sounds good, right? Let's see if it works. So today is a Thursday. I love Groundhog Day. I love the movie Groundhog Day with Andie MacDowell and Bill Murray. And for me, it's a Valentine's Day day. I love the love story of it. Every year on Groundhog Day, I watch the movie with my wife when my kids go to bed. And I honestly, sounds sappy, I fall in love with her all over again. She is my Andie MacDowell. And I've memorized every line from the movie. I can quote it by heart. And I just love the way I feel at the end of it, and it rekindles these feelings that I have, and just remember how grateful I am for such a superwoman in my life. Every year I watch it. You can bet $1,000 that 8:30 to 9:30 next year, February 2nd, I will be downstairs on a brown couch next to a beautiful woman watching the stupid movie on DVD that I've had for 20 years. You can predict that. So how do we uncover those behavior patterns in the banks? Two ways. Two ways. Number one, I can send the software vertically back on the calendar and specifically look for times where the market is being pushed up and down. Number one, I can tell the software to look back on Thursdays in the past to see if there are any times across each of those Thursdays that the markets are being pushed up and down. So imagine, for instance, every Thursday for the last 4 Thursdays, E-mini S&P futures went straight up at 945. We would have a general understanding that next Thursday we might want to be waiting at 944 and 30 seconds to place a buy entry with a very tight stop. Because there's a good chance, if it happened 4 weeks in a row, that it might happen again. Okay, so we can teach the software to look vertically on a calendar for very specific times of the day lately that banks are making calls, that banks are buying and selling. Does that make sense? Vertically, looking back, specific to a weekday, lately, when are the banks watching their movie? When are the banks making their moves? When are they pushing the market like bullies? Okay? We can also take the software and we can go back horizontally. We can look at very recent movements. We can say, computer, please look at Wednesday, Tuesday, and Monday. Has anything squirrely been happening over the last 3 weekdays? Are there any times on Monday, Tuesday, and Wednesday where the same things have been happening over and over again? Are the banks making calls lately horizontally? Does that make sense? Conceptually, we're studying their movements. How many of you are going to watch the American Super Bowl this Sunday? Right? How many of you will sit down with hundreds of millions of other Americans and watch 2 football teams go head-to-head, this quarterback going for his 5th Super Bowl ring? How many of you believe that these guys, they sit down and study the plays of the other teams, right? How many of you sit there and watch and know that the quarterback usually throws to the right from the other team? Or how many of you know that they're watching the other team to see which way the receivers usually turn? They're studying what? They're studying patterns in the ways the enemy plays the game. What does the quarterback do when he's rushed? What does the receiver do when there's two men covering him? Which way does the kicker kick the ball if there's a little bit of wind? They want to know statistically, what is a player going to do when put in a certain situation? So we want to know what the banks are going to do. And so when we get this output back from the computer, it's an answer to the question. Computer, when have the banks on Thursdays been pushing prices up and pushing prices down? Is everyone on board with that concept? Step one, a histogram chart, and you might not know how it works yet. I'm going to explain how to interpret it. It's very mechanical, not hard, once you know the 5 patterns that I'm going to teach you. There are 5 patterns that we're going to learn, 5 words that the banks use to communicate their shenanigans to each other. Such a great word, shenanigans, right? My grandmother used to use that word. I think we should use it more. This chart is a digital fingerprint of hedge fund and investment bank activity. This chart is the answer to the question, when are banks making their phone calls? When are they buying and selling? Specific to a weekday. Today this is for Thursday. Conceptually, does that make sense? Whether or not it worked remains to be seen. First we have to define what worked means. All right. Any questions so far? How's the pace of the webinar? Too fast, too slow, just right? Are we in that golden window of I'm learning something, but maybe keep it moving a little bit faster or slow it down a little bit? Everybody on the same page? If not, we can adjust the speed. This is your webinar, not mine. I know how this works. I want to make sure you know by the time we're done. Okay, Carol says we're good. Sweet. So there are 2 indicators on my chart right now. The bottom one is an analysis of trend. Say that with me, trend. The top one is an analysis of momentum. Momentum and trend. So there are 2 ways of looking at moves in the market. One is looking at the overall trend, and the other is looking at the moves inside of the overall trend, what you would call pullbacks and extensions. This is measured and analyzed, those smaller moves inside the overall trend, by the momentum fingerprint. This chart, this indicator, this histogram measures and looks for legs and retracements, pullbacks and extensions. The bottom histogram is the software telling us when trends historically start and stop. It's the answer to this question. When does the big move start? Okay? Top chart, quadcopter drone. Bottom chart, 747. Top chart, hand shovel. Bottom chart, bulldozer. Top chart, sailboat. Bottom chart, Titanic. I'm the king of the world! Right? And so we use very specific filters to look for very specific behavior patterns. The bottom chart references an SMA, a simple moving average filter. It pushes all price action via time movement through a moving average. And we keep that moving average pretty large. It's not 5 or 6 or 7. It's 60, 120, 180. We're looking for when does the market start to move and stop to move, stop moving. Momentum chart up above is looking for the legs and the retracements and the pullbacks. And it's the answer to the question, when is this market starting and stopping? When is this market moving and not moving? Let me shut this off so you guys aren't distracted by it. Okay, let's pull this down, turn that off. Who's texting me during the webinar? That's weird. Okay. Momentum is looking for small movements. So for example, the computer might be implying the trend is down until 8:15. But the momentum indicator is showing, yeah, but there was a leg up, a retracement, a leg up, and a retracement in that same period of time. So think of the top chart as the smaller moves, perhaps trend entries, in the direction of the overall trend. So far, so good? Okay. When you see a histogram that has a timestamp above the 0 line, when you see a histogram that has a timestamp above the 0 line, historically it's telling us two things. Number one, something happens now. This is an appointment that the banks are keeping with themselves. 8:25, 9:40, 11:10, 11:55, 14:30, 2:30 p.m. Eastern. Side note, the times will appear in the time zone of your computer clock. If your computer clock is set to Chechnyan time, it will appear in Chechnyan time. If it's set to UK time, all these numbers will appear in the UK time. It's specific to your computer clock. Any place you see a time on a histogram chart, something historically important happens now. Otherwise, it wouldn't exist. A call is being made over and over and over again at 8:25. A call is being made over and over and over again at 9:40. A call is being made at 11:10 and 11:55 and 2:30 lately. The computer finds this objectively, no emotions. It says, whatever your thoughts on the matter are, pay attention at these times. That's lesson number one, time rules. Okay, lesson number two. Everywhere you see a timestamp above the 0 line is historically a time of a peak. It's a time where selling pressure starts to kick in and push the market lower. Everywhere you see a timestamp above the 0 line historically is a time where the banks try to push prices lower. Conversely, everywhere you see a timestamp below the 0 line is a time where lately the banks have been trying to do what? Push prices in which direction? Up, higher, buying pressure. Now, if you will, for a moment, you have a document that I've given everyone in all of my emails. I've given everyone in all of the webinar invitations. In your GoToWebinar chat box, just above it, you have a file called the Guide to the Histograms PDF. It's in an area called Handouts. So would you look for a moment right now in your GoToWebinar control panel there should be something that says handouts. And if you click the down arrow, it should reveal 2 documents. Do you see those there? Go ahead and open up the one that says Guide to the Histograms. Okay? Let me know when you get there. Anybody get there? Again, appreciate you hanging out with me today. Okay. I made this book in response to people asking, Michael, I got the charts every week. What do they mean? Well, here's what they mean in essence. And we're going to label them numerically as we go through them very quickly. Number 1, everywhere you see a histogram with a timestamp above the 0 line represents a time where price usually goes down. So when you see a timestamp above the 0 line like this, it usually represents a time when we get to it in the present that prices historically fall down. Okay? In the book, it's pattern number 2. In the book, it's pattern number 2. So those of you that ask, what were those numbers earlier? This is a pattern number 2. Okay? It can take one of 2 forms. Form number 1, the market just goes down. In an uptrend or in an accumulation phase, when we arrive at those times, there are pauses. When we arrive at a selling pressure time in an uptrend, the market will just stop going up. It'll go sideways. It's as though the market was on fire and somebody pours water on the fire, but not enough to put it out, just enough to slow it down. So when we see a pattern 2, one of 2 things can take place. The market, if it was going up rapidly, should slow down, consolidate, maybe retrace, slow down, consolidate, maybe break out. But we should look for a slowdown and consolidation in an uptrend. Number 2, if we arrive at that time in a downtrend or a distribution phase, this represents what I call a suicide time. It's when the banks jump off the cliff. They get to the edge of the cliff and, they drop. They get to the edge of the cliff and drop. So your higher probability entries will always be for selling pressure times when the market is trending down. Now, I don't care what moving average you use. I use a 120 EMA. I've used it for 9 years. I can't change the moving average I use because there are people in forums who will say, he changed the moving average to curve fit the results. So I don't change it. How many of you have bought software where the vendor changes the settings every week to make the software look good? Raise them up. Every one of you bought software from a vendor who changes his numbers every week to make the output look amazing. I don't. The histogram values, all of the parameter filters, including the moving average I use, week after week, month after month, year after year is the same. There's times I want to change it. There's times I know everybody should change it, and I don't, to be consistent. So that's pattern number 2. Pattern number 1 looks like this. When you have a timestamp below the 0 line, when you have a timestamp below the 0 line, it represents a buying pressure time. This is all in the book. It represents a buying pressure time. This is a time the computer is trying to say to us with a picture. Computers can't quite talk to us yet. That's an exciting development, artificial intelligence, right? I can't wait. I hope I live long enough to have a virtual assistant that I can ask questions and assign simple tasks to and tell it to look for things for me like this. I think it's wonderful. I'm not worried about Skynet or the Terminator. But it's a time where the computer is saying if it could talk, you should watch for buyers here. The market might go up right now. But again, we know this information days, hours, minutes into the future. And on a chart, this would be pattern 1. So when you hear me talk about pattern 1, today I'll be referencing a buying pressure time. And when we get to those times in the future, this usually happens. When we arrive at these future times in the present, we should see a continuation of that behavior pattern. The banks make a buying phone call at these times. Does that make sense? Now, whether they did or they didn't this week remains to be seen. If they did, you have a decision to make in about an hour. It's going to be a good decision. I already know the answer. That's why I'm in a great mood today. When the market is in an uptrend or in an accumulation phase, buying pressure times produce large moves when those moves occur. In a distribution phase or a downtrend, it's the exact opposite of what we just saw. If the market is moving lower in a downtrend and we arrive at a buying pressure time, it'll stop moving lower if the signal is working. The market will continue to consolidate as we pour water on that down fire. It'll slow down and stop moving as fast. So for those of you taking shorts with those signals, these represent times to perhaps exit your position. It's not safe to hold your short much longer because the buyers are arriving down below. Does that make sense? The offense is giving the ball to the defense. Okay? So it's a way to sense when consolidation or chop is coming in either side of the trend. So we've learned pattern 1 and pattern 2. You now learn those words. You now know 2 words the banks are using. The third word is easy to understand, and it's pattern number 3. It's chop. Pattern number 3 is chop. When you see a histogram that looks like a Bill Clinton lie detector test, that looks like a California earthquake chart, I make myself giggle. Is that bad? It's probably bad. I'm talking to a computer with people who may or may not be there. I might be talking to no one at home right now. When you see a series on a trend histogram of up and down movements like this, when it looks very erratic, or there are a number of timestamps in a very small compressed area, the computer is going, Michael, I've looked back several weeks, I've looked back several days, and I don't find any discernible trend. Sometimes it goes up, sometimes it goes down, sometimes it goes sideways. This is a dangerous area. You might want to back away and leave this alone. And I believe this is how banks make most of their money. Okay, can we get serious for a second? I believe when you see this area on a histogram, this is when banks are getting ready. How many of you get in a position, you get stopped out, you get back in the opposite position? You buy, you get stopped out, then you sell. Then you get stopped out, then you buy again. You make 2, 3, 4, sometimes 5 trades in 5 or 10 minutes. and you get angrier, you get more upset, more frustrated, more revenge starts seething in your blood. And then it seems like as soon as you're done making all of those bad decisions, the market goes exactly where you thought it would go originally. These are the times to watch out for that. If this was an animal noise, it would sound like this. What does that sound like? Sounds like a rattlesnake, right? Wiggling its tail. Stay away. You're going to get hurt if you come any closer. How funny is it to watch me watch my fingers on the camera like this? Michael, should I buy the software? Absolutely, you should buy the software. Seems pretty complicated. I don't know if I can use it. No, you can learn it. It's pretty easy to use. I don't know. No, believe me, it's okay. Pattern number 1, pattern number 2, pattern number 3. Easiest patterns to learn. Buying pressure, selling pressure, chop. The next 2, a little crazy. The next 2 are a little weird. So, here's the deal. Pattern number 1, selling pressure. When we historically arrive at that time, the market will pull back up into that time and then start to drop away like this, if the pattern is working. I'll call that, this is pattern number 2 in my book. It's weird. I got to change the pages around. Pattern number 1, the histogram is a buying pressure histogram. And historically, when we arrive at that time, the market will pull back down into the position and then reverse and go up. Pattern number 3 is a histogram that looks like this. And when we arrive at that time, the market will enter the chop zone and then do stuff like this usually. Is everybody clear on those 3 patterns so far? Yes? No? You're funny, I'm just listening because you make me laugh? Okay. Let's color them in so we know, because the next 2 are hard. Harder. That's what she said. And boom. Okay. Pattern number 4. This is where those numbers you saw kick in. Pattern number 4 is a variation of pattern number 2. It's a selling pressure time. It's a histogram that looks like this. We'll put a 4 right here. And we'll color it in red because that's usually what I use. However, instead of the market coming into the time like this, Wayne, the market will move down into the time like this. It does the exact opposite that a pattern number 2 does in terms of price action. And if you look in your book, I've got a really great diagram for you. Go ahead and scroll down with me to page number 14. Page number 14, Emmanuel. Milan, page number 14. And here's what the pattern looks like. Now, if the market falls down into a selling pressure time, and it violates the prior swing low. Everybody know what a pivot is and what a swing low is? If the signal candle and or the candle to the left or the candle to the right, so plus or minus 1 bar, if either of these candles is below the prior swing, is equal to or less than this low, we're going to say flipsies. We're going to say reversies. We're going to say mirror image. The time is correct, but the banks aren't making a call to sell. They're making a call to buy. Let me go through that one more time. Normally, at the histogram time, this would be a selling pressure time right here. Boom, 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 boom. Normally, the banks, Wayne, would drive all the way up, convince people to buy, trip out the stops, and then drop it. So the incoming direction usually predicts the outgoing direction in time cycle theory, like a rubber band or a slingshot. You pull the slingshot back the direction you want it to go and release. So when you see the banks pulling the slingshot, pulling the rubber band in the wrong direction, there's a very strong likelihood that the dot or the histogram time will reverse in the opposite intended direction. An easier way to think about this is that banks very rarely sell at rock bottom prices. How many of you buy a car at a car show and then you wait for a market crash? Your Corvette is worth half of what it was worth when you bought it, and you say, well, I'm going to sell it now. It can't go any lower. It doesn't make any sense. And so this is reading the tea leaves of a bank move. And so when we see this pattern, this usually happens. Okay, here's the anatomy of that signal on this chart. Here's the prior swing low. Here's the lower low. Candle number 1 to the left of the selling pressure time is above the price of the lower low. So it doesn't get an arrow. It's above, no piercing, no puncture. That doesn't exist. But candle number 2, the actual signal time, look at it, Wayne, you see how it's way below this level. It's all the way down here. That wick popped right through the barrier. They're buying now at wholesale prices. And this is a way, remember, time is king. Pay attention to the time. And this pattern will help you mechanically interpret what's happening. Pattern here shows candle number 3 just to the right is equal to the low of candle number 2. It qualifies and it gets an arrow. This is hard. It took a lot of you months to figure this one out before you went, I get it. Yeah, I get it now. But it doesn't change the fact that it's a real pattern. It happens, and I'm going to show you it happened today a lot. That's pattern number 4. Pattern number 5 is the exact opposite of pattern number 1. If we have a buying pressure time that the computer was warning us about, we would normally expect the banks to do this. Come down, maybe pull back, drop down into the low, and then reverse the other way at the pullback. But pattern number 5 appears like this. The market will go boop, 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 boop. And it does the exact opposite of what was expected down here. And if you look in your books, that's exactly what we're talking about with pattern number 5. If we arrive at a higher high that violates the prior swing, either candle number 1 to the left of the signal, candle number 2, the actual signal, or candle number 3 to the right of the signal, we are going to assign a reversal, an exhaustion arrow to that time. Pattern number 5. The banks got too far too fast. The cows moved too quickly. All of their plans transpired correctly, but accelerated at an accelerated pace. Winthrop, it appears that we are at an all-time high when we were expecting to be purchasing. It went too quickly. What shall we do? Well, Jefferson, it seems that our investment from earlier has matured much faster than anticipated. I believe we should take profit here while we're at an all-time high. But Winthrop, we normally sell right about now, and that's what it says here. We should be selling. All the other banks are supposed to sell. This is the notice we've received. Jefferson, don't worry. This is code for selling. This is what we're going to do. I know we normally buy now. I see the bloody paper. But this is the pattern. We're supposed to sell. Yes, it's a pattern 5. Silly me. Okay, shall we sell 1,000 contracts? That's what's happening. And when you see that pattern in real time, we arrive at a buying pressure time that violates the prior swing high. And here, candle number 1 violated it. It was a new high. Candle number 2 violated the prior high. It's an even higher high. Candle number 3, no, it's lower. No part of it breaks that high. So no arrow for you. Does that make sense? You now know 5 very dangerous things. I have taught you 5 computer words that every hedge fund knows. I have taught you 5 computer words that every investment bank is using, has programmed in some way, shape, or form into their investment software, into their Palantir Finance histogram. In fact, I took a screenshot from what little information I could find about Palantir Finance, and I want to show you a shot that I found, and I want to compare it to my software. On the upper side of this platform, on the upper half of this slide, you'll see a screenshot from Palantir Finance. I didn't know this when we developed the software. I had no idea it existed. And then about 7 years later, this was my software. Can anybody see any similarities in the way they're tracking the market? Anyone see any similarities in the way the histograms are being displayed? A little bit of research online reveals that we're not too far off. What do you smell? I smell my edge coming back. Smells like an advantage that I should have. I think I shall take my advantage back. I think I shall use what they are using. And I will buy when they buy, and I will sell when they sell, and we shall have ale and regale one another of our victories in the market. Okay? You now know 5 words. Jim says, too bad you can't get the software to type pattern number 1, 2, 3, 4, or 5. Well, until about a year ago, I never gave these numbers. I didn't really know how to effectively teach this. This book didn't exist a year ago. Look at the date of publish. Who names a crazy book A Hitchhiker's Guide to the Histograms, by the way? That seems very silly. So Jim, I'm only just learning how to teach you what I had to learn. Sometimes I catch up. I'm not as smart as I think I am. And that's a hard lesson to learn the older I get. I wish I could learn faster. I wish I could teach it better. I'm on a good track, a good pace, but here's where we're at right now. Okay, everybody, we're going to take these patterns and I'm going to hide them for a second. Because now we have a chart. We have a physical chart to study. In your email that I sent out, remember, I gave you the histogram times in advance. Okay, so before we get to the times, here's what we know. Every one of these signals below the histogram, starting out the gate, is a pattern 2. It has the potential to be a pattern 4, but we won't know till we get there. Every timestamp above the 0 line, oh, I did it opposite, didn't I? Yep, now you're confusing us. Stop confusing us! Every timestamp above the 0 line is a pattern 2. Hey, Carrie. So these are all pattern 2s. Until we get there. And they have the opportunity then to be a pattern 4 if they're backwards. Every timestamp below the 0 line is a pattern 1. Until we get there. And then it has the potential to be a pattern 5 if it's opposite. And right here is a pattern 3 because everything gets spiky and hairy in there. Does everyone understand what I just did? I'm feeling kind of full of myself right now, Melissa. I feel like I'm on a roll, like this is one of the better classes. Can I just say I had a wonderful lunch with my wife. There's a place, I rode my motorized bicycle. How nerdy does that sound? The other week up to a place in the north here in the mountainous area in northern North Carolina. And there's a winery we didn't know about. We don't drink a lot of wine. And they had just started serving lunch during the week. And it said open on Thursdays. So today we went back, and apparently they're so out in the boonies, no one can drive that far to eat lunch and get back to work in time. So we literally had like a 5-star chef, a sommelier, like all to ourselves. We're in a dining room that should hold 80 people, and there's one table in the middle, and we're like Thurston Howell III and Lily Howell from the Gilligan Island show. And they were so happy to have us. They were telling us stories and bringing us samples, and we were king and queen for an hour, and it just put me in a really good mood. So I think we're in a better teaching groove as a result. We might have to go back to that place. It was great. I'm recording the whole session. Yes, Wayne. Okay, so that's what we had on Tuesday. Tuesday is in the past. At that point, Thursday is way over here in the future. No clue if what's going to happen is going to happen in the future. Now, let's put some numbers on here. As of 8:15, it was a pattern 1. 8:25 was a pattern 1. 10 o'clock was a pattern 2. 9:45 was a pattern 1. 11:10 was a pattern 5. 11:55 was a pattern 4. 2:20 and 2:30 were pattern 1s. And 3:40 was a pattern 2. Remember on here what we said each of them could be. So now let's review what happened, Carol. Let's review what happened, Andrea, at these times. Because listen to me, all seriousness. No goofing around here. If a computer program studying the behavioral movements of the banks that you can afford is able to predict the moves of the largest index in the world 2 days in advance, that has to mean something. That has to be a fantastic find for you. Let's not underestimate the value of what we're about to see. This is life-altering and life-changing. This is the answer to the question, why is it so hard to trade? It's not, I'm not going to use words like secret code and secrets. It's not a secret. It's hidden in plain sight. Did the market go up or start to go up at 8:15 and 8:25? Did the market start to go up and go up at 9:45? Did the market start to reverse its trend and or eventually go up at 2:30? Did the pattern 5 at 11:10 produce a down move? Did the pattern 5 at 3:55 produce a down move? Did the 3:40 signal, the pattern 2, begin a selling pressure event? Did the pattern 4, the lower low selling pressure signal, produce an upwards reversal at 11:55? And did 9:35 Michael Healy actually produce an upward pressure move at its pattern 4? Everybody stop. Look. See. 5 mechanical pattern words that you now know. I can't take it back. I can't charge you 10 grand for the DVD or Blu-ray series. I can't make you come to my mansion in West Palm Beach for a special shrimp and finger foods training session. You know the words. You had the interpretation when I gave you the forecasts. I'm using the same book I gave you 2 days ago, and yet here we are. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 signals. Michael, why wouldn't I want the 940 signal? Let's talk about the 940 signal. Michael, what direction was the moving average going at 940? Michael, what direction was the moving average traveling? Was it upwardly sloping or downwardly sloping at 940? Think about what took place here, because it was a beautiful entry for those of you who saw it and recognized what was happening. You'll remember when we did our studies just a moment back ago, I told you that anything that was a signal in the direction of the trend had a higher than average potential probability of going up. In fact, in my book, I specifically mention any signal for a buying pressure time in the direction of the trend is a higher than average trade. I know, I want you to think about the sequence. So at 9:40, we had one of these signals in the direction of the trend that historically produces what? A bigger than average move. Okay. What is that signal sitting right next to a minute below? Sitting next to one of these. So Michael, in the span of 2 candles, I have one of these. And I have one of these. Carrie, what's most likely to happen when I have one of these sitting next to one of these? What is it telling you about what the banks are setting up and preparing to do? Melissa, what might that communicate to you? Milan, the dots appear on the open or the close, depending on what you program it. So I see both of those patterns 2 days after I gave you the forecast. And Michael Healy, each of these candles has a demand wick underneath it. And they've just tripped out this stop. Stop run. Buying's coming. And Michael Healy, look, what's your risk on the trade? If you buy right here at 9:40, your risk is just below the candle, 2 3/4 points. If you wait for here, your risk would be larger, 4.5. Okay, there's defined risk. So we have 2 buying pressure signals in the direction of the trend, side by side, next to each other, opportunity to get long. It is in a chop zone, Michael, that is correct. It would be aggressive to look for that entry, but you have a defined risk at that point. So you are interpreting that correctly. When we get to 10 o'clock, what happens at a red dot in an uptrend, Carrie? What did we say in our book usually happens to a selling pressure time in an uptrend? Sideways. It's electric. Do, 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 do. Do, do, do. You slide sideways. And one of 2 things happens. It either retraces or it breaks out and goes up. One of 2 things happens. Selling pressure in an uptrend. It retraces a little bit, consolidates, and either breaks out of that consolidation. Did that happen at 10 o'clock? Carol, did that happen? Andrea, did you see consolidation? So is it okay for me to put a blue arrow here? What we were expecting to see took place. Sideways, 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 sideways. There's our channel. Boom, 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 boom. There's the breakout. We want to go higher. Your stops then go below the consolidation range, and you wait for the next signal. When you see a breakout of a consolidation phase, red dots in a green uptrend, green dots in a downtrend. Hold the trade until the next time cycle. Okay. Now, this is my favorite part of the webinar. And this is where you help me. I've taught you a lot of stuff, but I want you to help me figure the next part out. And then we're going to look at some advanced techniques here in a minute. On a scale of 0 to 100%, and I need 10 volunteers, I've been doing this now for 10 years, almost 10. It'll be 10 in July, I think. 9 or 10, I can't remember. You're getting old. Carol, Andrea. Who else is here? Jerry, Jimmy, Mark, Wendy, Sal, Tony. Was it accurate? Was what we were expecting to see actually happening 0 to 25% of the time? Whoops. Ooh, come on, Leidic, you can do it. 25 to 50% of the time? 50 to 75% of the time? Or 75 to 100% of the time? What percentage of the time was the signal we'd been waiting 2 days for interpreted with the mechanical rules, the 5 words that you know? What percentage of the time did it actually play out? What we were expecting to see? Was it 0 to 25% of the time, 25 to 50% of the time, 50 to 75% of the time, or 75 to 100% of the time? I have 3 answers. I need 7 more. I will never tell you what the accuracy of the software is. I made a vow to do that. I will only tell you what other people have said it is. Using our data mining, I need 7 more people. Where can I put my arrow? Is it here? Is it here? Is it here? Or is it here? I don't care what you say. That's 4 people. I need 6 more. Come on. Carrie, you got to say it. My hands are tied. I can't teach you anymore until at least 10 people tell me what the results were. 1, 2, 3, 4, 5, 6, 4 more people. What vendor tells you to tell him how accurate his software is? Some of you know the answer. It seems rhetorical, but I need you to say it. Okay. 2 more people, please. Good chance to refresh. Okay. Here's what you said. I will not share your full name. View, Zoom, 300%. Here's what you said. And if you see your name, you know it's you. Nobody here said less than 60%. So I'm going to take my arrow and I'm going to put it right here. This is just 1 day. And we're going to say 60 to 70%. Minimally. No one in here would is there anyone here who disagrees with that number? Speak now or forever hold your pieces. I'll post your answer if you agree, if you disagree. All right. What does that mean relative to our sample in our experiment? If these 2 histograms are producing results that are 60 to 70% accurate 2 days later, can we say that the software is working? Or are we forced to say the software is failing? Is there anyone here who would say your software did not work? This program is bullcrap. I knew it! Snake oil salesman. Everything I read about you on Big Mike's forum is true. No, it worked. It gets weirder. What was yesterday? Carol, what was yesterday? What happened on Wednesday? A lot of crap happened on Wednesday. Look, it is the worst possible day to give you a forecast for. It is the worst possible day to send you what the computer thinks might happen. If I was trying to look stupid, dumber than I look right now, and I know that's hard, I would give you the forecasts for the E-mini S&P the day before the FOMC was released. Wouldn't I? Why wouldn't I just maybe skip this week? You know what? Hey, Rachel, don't send out the histogram times for tomorrow. It's the FOMC, and I don't want to look stupid. Software won't work then. Won't work. I wouldn't do that if I didn't believe in it. But watch this. Here's the histogram times for Tuesday, or for Wednesday, forgive me. I was dumb enough to give them to you. Look, I made the call and I said, send them out. Here it is. Would you care to see what happened yesterday at the Times? Milan, tell me that's 50%. Tell me more about golden zone trading. Tell me how nice the other vendors' presentations are. Because Milan, I'm the only person in the NinjaTrader ecosystem who can tell you the day before the Federal Reserve releases its statement when that market is going to go up and down and be right 70–80%. There's no other vendor in the world giving this information to the trading community. And you know what my reward for that is? People write about me in these forums. They question my faith. They bring my family into it. I get called all sorts of names. I get trashed by people who've never been to a webinar just for insinuating this is possible. You know who else that happened to? You know who else said these exact same things that I'm showing to you? This guy. 100 years ago, there was a man from Lubbock, Texas, named William Delbert Gann. And he made an interesting discovery when he started doing his data mining by hand. He said He had a Texas accent. Time is the most important factor when determining market movements. And by studying the past records of the averages of stocks, you will determine for yourself that history does repeat, and that by knowing the past, you can tell the future. And if you study what the articles about him said, if you go back and research what other traders thought, they hated him. He was called a fraud. Magazines, the Ticker and Investment Digest, run by a man named Richard Wyckoff, sent people to watch and see if it worked. And they came back and they said it worked. And you know what they said, Melissa? They said 6 or 7 times out of 10, he would predict the exact high. 60%, 70% of the time, he was able to tell us when the railroad stocks were about to go up or go down, and it was exactly right. 6 out of 10, 7 out of 10, 6 out of 10, 7 out of 10, boom. Carol, what happens at a selling pressure time in an uptrend? What happens at a buying pressure time in an uptrend? What happens at a pattern 4 signal at a selling pressure time? What happens at a signal in the direction of the trend when it's a pattern 2? What happens at a pattern 1 in a downtrend? Here comes the FOMC report. No way to know what's going to happen. Anything could happen. The report is coming out and it's going to be amazingly random. At 2:30, the day after I gave you the signals, market falls like a rock. At 3:10, the market rises like a rocket right into 405, where it starts to drop down into the close. Yeah, I see it too, Carrie. On a scale of 0 to 25, 25 to 50, 55 to 75, 75 to 100% of the time, we're up around here right now. We have one failure. We have one failure right here. Bob, tell him what he's won. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 signals. And 1 out of the 10 signals doesn't do what we're expecting. You know what that accuracy is? What are we talking about? Well, I got to do my due diligence on you. There's some due diligence got to be getting done. Done, I did it. You're finished. There's nothing else to research. Well, I need to see 15 years of audited trade records from an independent observer. No, get out. Go home. You don't know what you've got. If you're not looking at this chart and saying to yourself, this is amazing. This is what I've been looking for. This is the answer to the question, why do I suck at this? You never had a chance. They knew what the report was going to say. Guys, this is 2 days worth of signals. Do you understand? This is 2 days worth of signals. You got 60 to 70 on the right. You got 90 on the left. That's 2 days of signals. That's a London session, a New York session, Asian session, a London session, and a New York session. Back to back to back to back to back to back to back. I know this because I had a customer. His name is Tom, and Tom wasn't quite sure to believe us. And you know what I did? Carrie, yesterday I shorted right here, and I showed him the trade. And Carrie, I bought right here, and I showed him the trade. And it was 6 points on the way down, and it was 6 points on the way up. Sent him an email the next morning. I didn't hear from him. Matter of fact, he's not here right now. Said he had a phone call till 4:15, and then he was, I don't know. You would think if you traded the S&P and I was able to show you this, you would make it to the webinar. You would think if I gave you these times in advance on the FOMC day and we were 90% accurate, you would make it to the webinar. So what happens up here in people's minds? What happens up here that they reject this? That's a question for another day. Any questions about the software? Any questions about the results? What actually took place? The accuracy of the signals? Steve had a great question. He said, hey, do the red and green buy and sell signals appear days before or real time? Okay. Well, Steve, remember when we started out talking about where the signals came from? And I said we could look vertically or horizontally on a calendar. Okay. I want to show you how far in advance those signals were knowable. So, Steve, all of my histogram charts are based off of a vertical analysis. This is a good question. Thank you for asking it. Good question. So, Steve, I use a 2-week look back. Today is Thursday, and Steve, I used 2 weeks of Thursdays. No, you're fine. So, Steve, I've had the information for Thursday and for Wednesday for a week. Let me say that again. As soon as the market closed, Steve, last Wednesday, the computer was able to compile all of the data and squirt out a histogram for Wednesday. As soon as the market closed last week, Carol, on Thursday, the computer was able to squirt out a histogram for the following Thursday. And guess what? As soon as the market closed last Friday, I had the histogram for tomorrow. So, Steve, how far in advance do I always have the histogram with a vertical analysis? How many trading days in the future do I always have the histogram? A week. That's right. So, when I send you the charts in the emails, they look like this, right? Steve, you see that dotted white line right here? You know what that dotted white line is right now? That is the present. Carol, check it out. Ready? We spent a lot of time making this simple for you to learn, and I hope that it comes across that way. This dotted white line is the present. It is moving steadily forward into the future, la futura. So that means everything to the left of the white line, Steve, is what? It's history. But so far we know from our results that the accuracy of Monday, or forgive me, Wednesday, was 90%. The accuracy of today, everybody minimally said 60 to 70%. So Steve, everything to the right of the white line is what? A possible future. Okay, so these are the times for Friday. These are the times for Monday. These are the times for Tuesday. These are the times, sounds like a Billy Joel song. These are the times to remember for Wednesday, Wednesday. And Carol, these are the times for next Thursday. Will this work on stocks? Let me finish with Steve's thought and then we'll answer that. Do the red and green buy and sell dots appear days before or real time? Steve, now when you look at the chart, do you see how kind of backwards the question is? I can't print a dot on a bar that won't exist for 4 days. I don't know where to put the dot. It's over there somewhere. So Steve, one of the things I do to compensate, you have a good question, I'm not insulting you. One of the things I do to compensate, Steve, is I create a chart that looks like this. GC0417. Steve, do you see how the lines are appearing out into the future in my gold chart? That's how I know what I'm sailing into. Remember that movie, The Perfect Storm? George Clooney and Mark Wahlberg were sailing right into the heart of the storm. This tells us what we're moving into next. And so while I don't know where price will be, I can guess. I can teach you where to guess too. I know when the next signal is coming and what I'm coming into. Does that make sense? These are the next times in crude. So I always know where the next signal is coming. This is a good question. Carol said, hey, does this work on stocks? Carol, do you look at stocks intraday or do you look at stocks end of day? Okay. Well, that's a great question, and I fortunately have a good answer. There are 2 packages that you can purchase from us, both of which are amazing. And I want to tell you the difference. The professional analyzes everything from 1 minute to 240-minute bars. The investor is the professional plus end-of-day analysis. So it's this one plus the daily bars. So Carol, let me introduce you to the daily cycle marker tool. And let me introduce you to several stocks that I'm very, very happy to know about. This Chesapeake Energy are the signals that we're seeing in Chesapeake Energy on par with what we saw in the S&P a moment ago. In fact, let's create a list. Most liquid stocks by volume. And before you say I don't know what I'm looking at, let me explain it to you. This is the daily cycle marker tool. And if you watch my YouTube video series, you'll be able to track and see some of the things that I've been doing with it. And Carol, essentially this program doesn't use a histogram. It tracks a 90-degree energy cycle in the markets. And it's always rotating. And so we go between a phase 1. Such a great question. Thank you. A phase 2. A phase 3. Thanks, Milan. Have a great night. Phase 4. And Carol, everywhere you see a little green dot is a phase 1. Everywhere you see a large green dot is a phase 2. Everywhere you see a little red dot is a phase 3. Everywhere you see a large red dot is a phase 4. And do you see how they're continually rotating through? 1, 2, 3, 4. Kind of like the periods in a hockey game or the quarters in a sporting event. The 4 seasons of the year. Okay. So we have this wonderful list right here. Most liquid stocks by volume. That should, in theory, Kara, tell us which instruments the banks are really playing with, right? Like a sine wave. Yeah, you're right on it. Wayne, I had a 20 on here. I don't know why. I'll be consistent and change it to a 120. I might have just not hit the 1 when I loaded it. Thank you. Thanks, Wayne. Okay. So one of the things I've noticed is that, Carol, I can use this to detect which instruments the banks are manipulating the most. So this is the top ranked by volume, Bank of America. You see it here. I'm sure you're aware of it. Carol, what almost always happens at a phase 1 and a phase 2 in the Bank of America stock? Whoops. What are those good times to look for? Yeah. Now here's what's weird. How long have they been doing this? Forever. On a clear day, I can see forever. And we're going back, and we're going back, and we're going back. Where are we here? Carol, this is 2013. And we're going back. I'm walking. Yes, sirree, I'm walking. Remember this? Back in 2011? What happens on the phase 4 days when we arrive at them? Bad, very bad. Very bad things happen. Shareholder meeting. So Carol, what's coming up next in 5 hours and 46 minutes? According to the note in the upper right-hand corner. What phase is next in our rotation in the sine wave? 1, that's right. So I take my cursor and I go, hey, what happens in the Bank of America stock usually at a 1? Well, let's take a look. This one was a pattern 5. It was a higher high. So we don't look at that one. But the rest of them seem to imply what? From here to the phase 3 was $1.39. From here to the phase 3 was 66 cents. From here to the phase 3 was a 22 cents loss. From here to the phase 3 was a 59-cent gain. From here to the phase 3 was $3.45. From here to the phase 3 was a 14 cents loss. How many of the signals were winners? 4 out of 6. 66%. How accurate did we say the software was in the E-mini S&P a moment ago? Pika, pika, pika. Are there some correlations here? See. Okay, so now we get to the intraday question. That's enough freebies for you. Now we go to the intraday side of things. And we start to look at other markets. We start to look, and I will change the data series to regular trading hours for you stockies. You see what was supposed to happen in Google today? What are the most powerful signals in a downtrend? Selling signals or buying signals? 10 o'clock, we have a pattern 2. The price of Google at 10:02 drops until the next pattern 1 and goes $5.50. What happens to green dots in downtrends? Consolidation, sideways. Hey, that's funny. This looks like a lower low right here. Carol, when you have a lower low red dot, we give them a green arrow pointing up, right? Because that's a pattern 4, if I'm mistaken. Did it work in Google today? Are you trying to tell me that this has nothing to do with their returns, and Eric Schmidt said something about Donald Trump, and there's no people from the Muslim nations coming to program the search engines anymore, and you've had this information for a week since before the ban? Is exactly what I'm saying. The banks don't give a rat's ass about your fundamentals. They don't care what guru you're listening to. They don't care what report you read in the Wall Street Journal. As a matter of fact, they love it when you read the Wall Street Journal. They love that you follow Jim Craner with his buy, buy, buy. They love that you watch all these TV shows and tune in to your subscriptions. And at the end of the day, guess what they do? Exactly what they were going to do. So, of course, it works on stocks. This works on any instrument with volume, anything the banks are trading. And then I had to put a footnote because I had a trader in New York, in Brooklyn, a wonderful old Jewish man. I can't remember his name, but he was very annoying because he asked questions every 13 seconds, and it never stopped. And you know what he traded? Soy meal futures. Do you know there's such a thing as soy meal futures? I didn't know. Do you know how many people trade soy meal futures? Like 6. It is as thin a market as I've ever seen. And he made a lot of money. Any instrument with volume, euro, dollar, pound, dollar, dollar, peso, euro currency, Australian currency, pound currency, gold, silver, natural gas, oil, platinum, silver, copper futures, orange juice, coffee, the DAX, the FTSE, the Bund, the Nikkei, the Hang Seng, the Australian stock indices, the Canadian stocks, South African stocks, bonds, notes. I have seen this applied to every instrument that you can imagine. And the results are sort of universal, right? So let's kind of back up and take a look and review at what we've done so far. I find it helpful to regroup, especially when my brain tends to get foggy. So, what can the software do that you currently can't but have the option to do 1A, projections up to 5 days in the future, that can be as accurate as 60, 70, 80, or even 90% true to expectations based on 5, get up there, mechanical patterns. Stronger likelihoods and larger moves when the pattern aligns with the local trend. And again, I use a 120 EMA. Your mileage may vary. What else did we discover? We discovered that it's not exclusive to one instrument class. Works with bonds, futures, notes, stocks, forex pairs, currency futures, all international markets, including the Indian Nifty, which was super fun installing on a customer's computer. This has an immediate and profound effect on your trading. Number one, you feel more relaxed when you trade. Michael, since I started using your software, I'm not as anxious as I used to be. I don't lock up. My arms don't get all tense. My breathing doesn't increase. My sphincter doesn't get all weird. I'm normal. I feel like I'm in control. B, I feel entitled. Like the market should do what I'm expecting it to do. Our customers start to become whiny teenage babies when the market doesn't work the 1 or 2 times they were expecting it to. Oh, come on, you're supposed to go up. B, I take less trades, but higher quality trades. Okay? Less revenge trading and chop trading. I'm not constantly getting in and getting out of the markets. I save commissions on my statement each week. Broker isn't getting rich off of me. E, I have more time each day to do the things I enjoy and that are meaningful because I can plan out my trading days 5 days in the future. We had a customer when we first started. Her name was Dawn. I remember a lot of you by name. I remember your stories because some of you have had a pretty crappy life. And Dawn's husband had passed away. They lived in California. She had a horse ranch, or they had horses. I don't know if it was a ranch. And her husband and her had successfully raised these horses, and they rode them together, and they loved them. And then one day her husband was gone. And all she had left was this big insurance check. And that insurance check to her represented a time bomb that was ticking. And every day that she was alive, there was less money in there than there was the day before because she had to pay for hay, she had to pay for vet visits, she had to pay for food, she had to pay for heat and all of those wonderful utilities and taxes. And she said, you know, I feel like I'm just draining my husband's life savings. I feel like I'm just a drain here. And so she started to teach herself to trade. And she used a technique called market profile. And she watched for very specific support and resistance levels known as value areas and points of control. And Dawn would wake up after she purchased our software. She traded once or twice a day with a 2-point target in the E-mini S&P and a 2-point stop. And she said, Michael, I wake up and I look at your histogram. And if I see chop in the histogram, I don't trade. I said, Dawn, what do you do? She goes, I go take care of my husband's horses. So what if you don't see chop? She said, then I stay inside that morning. I know what time to be at the computer. I wait for that time, and then I place my trade. And it either works or it doesn't, but it works most of the time. And she said, when my trade time is up, I go outside and I take care of my husband's horses. And she said, do you know what? She said, for the first time since he passed away, I'm not draining that account, and I feel like I'm contributing. On an average weekly basis, I get 30 to 40 cynical people emailing me, well, if this is so good, why do you do what you do? Why even share it? Because people like Dawn, people like Melissa, people like Tracy. There are people here that are trading to pay for their family's medical bills. Did you know that? There are people in this room whose mother or father are in full-time adult care. There's thousands of dollars. Can you imagine? You're in your 40s and 50s and you're thinking now it's time to relax and start to ease off the pedal a little bit, and your mom or dad suffers a stroke, falls, breaks something. There are people using this software, A, B, C, D-ing it every day. That's why we do what we do. Take your edge back. Take your edge back. You've been with me 2 hours now. You've been with me over the course of 2 hours. And it's time to make a decision. What are we going to do? What are you going to do? Because Friday is coming. Monday is coming. Tuesday of next week is coming. Wednesday of next week is coming. The most volatile, profitable year, I believe, in American financial history is on the way. Me personally speaking. I'm not a CTA, I don't know. But all I know is that it keeps going up. And it would seem to me, if you knew the times that it was going to go up farther faster, you might have an edge. An edge that you're supposed to have that the banks took away from you. We are right here. Can you imagine if you just focused on the uptrend times, if you just focused on the buying pressure times in the uptrend between now and the end of this year, what that would produce if this continues to work the way that it's been working over the last 9 years, the last 4,000 customers, the last 4,000 Dawns and Carries and Waynes and Steves and Dougs and Irwins, the last 4,000 Melissas and Michaels and Rons and Bobs. If you can know this, why would you not know this? If it's possible to have it, if you took place in this experiment and you saw for yourself that, hey, he gave it to us here, this and this happened, and when that was done 2 days later, it was 60 to 70% accurate. No other vendor in the world can do this. So I'm going to stop the recording here. For those of you watching it in the future, Please contact me directly or feel free to take our video demonstration at backtothefuturetrading.com. You can also email me, Michael@backtothefuturetrading.com.